US debt is now like $36 trillion. That's 120% of GDP. That is a lot of money. Now, president's trying to fix it, but his plans are complicated. This guy wants to do tax cuts, which cost a lot of money, wants to lower interest rates, and he wants to do less spending, but not on big programs. And the stock market is kind of crashing a little bit today. So let's try to unpack that. For the debt problem, the US spends way more than it earned. That's not a good thing for me, for you, or for anybody. Last year, the deficit was about 6% of GDP, gross domestic product, all the stuff we make. Now, president's goal is to cut that in half, but here's the catch. He also wants like 4.5 trillion in tax cuts over the next decade. How does that math work out? Well, spoiler, it's not going to. So that tax plan is extending the 2017 tax cuts, which kind of helped create a decent amount of the debt that we're dealing with today. Let's eliminate taxes on tips and overtime pay. Sounds kind of good, but that costs a lot of money. And he wants to remove the SALT cap, which is good for high tax states. Sounds great, but it could add something $75 trillion to the deficit by 2035. That is a lot of money. That's like a 20% boost. Who pays for it? Well, millennials, Gen Z, somebody else, not really boomers because they'll be gone. So tariffs now. So president's trying to use tariffs to raise money. So when you import stuff, American consumers pay a bit more for those imports. And then supposedly that could be looked at as additional tax revenue to pay for some of the debt. You're thinking stuff like 25% tariffs on metals like steel and aluminum, 10% on Chinese imports, stuff on Mexico, stuff on China. So those tariffs do bring in revenue, but they make stuff more expensive. That drives up inflation. Goldman Sachs says tariffs could add maybe 1% to inflation this year. And that's not good. That's not good. I kind of really don't think they're going to do as much in tariffs as we think they're going to do because of that. So inflation means higher mortgage rates. Here's where it gets tricky. President promised to lower mortgage rates, but inflation is going to keep them high. It's going to keep around 6 to 7%. You need really low inflation, lots of free trade to try to bring those mortgage rates down. Even though the Fed cut rates last year, housing costs are still through the roof because inflation won't quit. And also, home sellers are asking for a ton of money when you buy a home. Then there's stock market chaos. The stock market has tanked a little bit this month. And some people are saying it could be on purpose. Why? Because if markets crash, the Fed might cut interest rates to help the economy. Lower rates would mean cheaper debt for the government, and that could also lower your mortgage rates if you still have a job. Now, that might be BS. I don't know. Crypto, some people are looking at crypto as a debt fix with a crypto strategic reserve. I don't know. That's not really going to do too much. It's risky, volatile. I think Bitcoin is still going down. Gold is now important again. So gold is doing well. Crypto is a little risky. Those prices for gold are really high because investors are scared about inflation and a possible dollar devaluation where the dollar drops in value. So they're turning to gold as a safe bet. Man, this gets complicated, right? There's other things that you could do. You try to force China and Japan to trade their US bonds for cheaper ones. That's called debt restructuring. You could sell US residency permits for $5 million each to try to get rich foreigners come in here, which is a little desperate. And anyway, all of this chaos could lead to a recession. And this could be controlled demolition of the economy to lower inflation and force interest rates down. That would mean a recession. That means higher unemployment, which totally sucks. So we'll see what happens with that in the future. None of this stuff is, well, it's bold, it's risky, it could backfire, it could make things worse. Who knows? Anyway, so right now we're trying to fix 36 trillion in debt with tax cuts, tariffs, crypto bets, and maybe even market chaos. And that is why investors are nervous. Gold is up, stocks are down, recession fears are growing. I don't like any of it.